You have probably heard this phrase before. We have strong alignment of interest. It shows up in almost every investor presentation, or on the surface, it sounds reassuring. The sponsor is investing alongside you, they have skin in the game. Naturally, you assume your interests are aligned, but here is where I want you to pause and think for a moment. Alignment is not always what it appears to be. Let me explain. Most investors equate alignment with one thing only: the GP co invests dollar amount. If the sponsor is putting in capital, any capital, that must mean they're aligned with investors. Sure, partially that is correct, but that is only one piece of the puzzle, because alignment is not just about how money goes in, but also about how money comes out, and more importantly, how decisions are made along the way. Let me give you a few examples to illustrate the point. A sponsor can co invest but still earn significant fees upfront: acquisition fees, financing fees, asset management fees. So even if the deal underperforms, they may still be compensated with the fees I just cited. Is that true alignment, really? Another example, the promote structure. Many deals are structured so that the sponsor earns a disproportionate share of the upside after a certain return threshold. For example, a 50-50 split after 15% IRR is achieved. And that can be a good thing, but it can also incentivize risk taking, because if the deal performs well, the sponsor will benefit significantly. But if it underperforms, the downside is often shared more evenly with investors. The question in this example becomes, are incentives truly aligned, or are they asymmetrical? Now, I want to be clear. This does not mean that these structures are bad in any way. Most of them are pretty standard in the industry, but it does not mean you need to understand what alignment actually looks like. Here is how I usually think about it. There are two types of alignment: economic alignment, the money side, and behavioral alignment, walking the talk. Economic alignment is really what you see on paper, how it's documented, who invests what, who earns what. Behavioral alignment is how decisions are made under pressure. Does the sponsor prioritize preservation of capital or chasing returns? Do they communicate transparently when things go wrong? Do they make decisions that protect investors, even if it impacts their own upside? That is where true alignment shows up, not in the marketing, but in the behavior. So the next time you hear aligned interests, ask a few deeper questions. How is the sponsor compensated across the life of the deal? What happens if the deal underperforms? Where do incentives diverge? Because alignment is not a statement, it's a structure. And more importantly, it is a pattern of behavior. And if you get that wrong, everything else in the deal becomes secondary.